How profitable traders reach the trading zone. 4 psychological stages. Sit down. Forget everything you've been told about making money in the market. Most people believe profitable traders have secret indicators, a magical strategy, or information that nobody else has. They're wrong. The greatest fortunes on Wall Street were never built by men with perfect predictions. They were built by men who mastered themselves. I learned this lesson the expensive way. The market took my money, my confidence, my pride. Not because I couldn't read price, but because I couldn't read my own mind. The market is not your enemy. Your emotions are fear, greed, hope, impatience. These 4 emotions have destroyed more trading accounts than every market crash in history. A profitable trader isn't someone who wins every trade. A profitable trader is someone who stays calm while everyone else is losing control. There comes a moment, a strange moment, when the noise disappears. The news no longer matters. Other people's opinions lose their power. Your heartbeat slows. Your decisions become effortless. You stop chasing the market, and you begin waiting for the market to come to you. That is the trading zone. Very few traders ever reach it. Most quit before they even know it exists. Today, I'm going to show you the 4 psychological stages every consistently profitable trader must pass through before entering that zone. Not theory, not motivation, but principles written in losses, paid for with years of experience, and proven every single day the market opens. If you're tired of emotional trading, if you're tired of making the same mistakes again and again, stay with me until the end, because the 4th stage changes everything. Once you understand it, you'll never look at the market the same way again. Stage 1. The painful awakening. Every trader begins with confidence, too much confidence. You open your charts believing the market is waiting for you. You believe intelligence alone will make you successful. You think one good strategy is enough. You imagine that after watching enough videos, reading enough books, or finding the perfect indicator, consistent profits will naturally follow. That illusion never lasts. The market has a way of introducing every trader to reality. It does not care how excited you are. It does not care how many hours you studied. It does not reward hope. It rewards discipline. The first psychological stage begins the moment you realize that your biggest opponent is not the market. It is the person staring back at you in the mirror. Most traders refuse to accept this. They blame manipulation. They blame market makers. They blame institutions. They blame news events. They blame bad luck, everything except themselves. But profitable traders ask a different question. Instead of asking, "Why did the market do this to me?" they ask, "Why did I allow myself to make that decision?" That single question changes everything. Imagine 2 traders taking exactly the same setup. The first trader enters with a plan. He already knows where he will exit if he's wrong. He knows how much he's willing to lose. He accepts the risk before pressing the button. The second trader enters with excitement. He has no stop loss, no plan, no exit, only hope. The trade moves against both of them. The first trader closes the position. Small loss, no emotion. Tomorrow he trades again. The second trader freezes. He tells himself, "It'll come back." Minutes become hours. Hours become days. The loss grows. Hope replaces logic. Fear replaces discipline. One bad trade becomes a devastating mistake, not as something important. The market treated both traders exactly the same. The difference was psychological. That's why trading is unlike almost every other profession. In most careers, working harder produces better results. In trading, working emotionally produces worse results. You can spend 12 hours staring at charts and still lose money, because the problem isn't the chart. It's your emotional reaction to uncertainty. The market exposes every weakness you try to hide. If you're impatient, it will show you. If you're greedy, it will magnify it. If you're arrogant, it will humble you. Every trade becomes a mirror, not of the market, but of yourself. Most people think losses are proof they're failing. They're wrong. Losses are tuition. Every professional trader has paid them. The difference is simple. Amateurs pay tuition and learn nothing. Professionals pay tuition and become wiser. Your first mission isn't making money. It's understanding yourself. Because until you understand your own emotions, you'll never understand the market. Stage 2. Detaching from money. This is where most traders disappear, not because they lack intelligence, because they cannot separate money from emotion. Every dollar on the screen feels personal. Every loss feels like failure. Every winning trade feels like proof of genius. This emotional attachment is dangerous. Why? Because it changes the way you think. When money becomes emotional, objectivity disappears. You stop following your plan. You begin protecting your ego instead of protecting your capital. That's when revenge trading begins. You lose one trade, then another. Instead of stepping away, you increase your position size. You tell yourself, I just need one good trade. That sentence has destroyed countless accounts. The market owes you nothing. It doesn't know your losses. It doesn't know your goals. It doesn't know your financial problems. The market simply moves. Nothing more. Nothing less. Professional traders understand this. They don't trade because they need money today. They trade because probabilities favor them over hundreds of trades. Think like a casino. A casino doesn't panic when someone wins. It doesn't celebrate every customer who loses. It simply follows its edge, day after day, week after week, year after year. That's exactly how profitable traders think. Each trade means very little. The next 100 trades mean everything. When you begin thinking this way, fear starts disappearing. Why? Because no single trade matters anymore. You're no longer emotionally attached to one outcome. You become attached to consistency. Imagine an archer. He pulls the bow. He aims carefully. He releases the arrow. Once the arrow leaves the string, he cannot control where the wind blows. His responsibility ended the moment he executed correctly. Trading works the same way. Your responsibility is preparation, execution, risk management. After that, the market decides. Accepting this truth creates freedom, because profitable traders don't try to control the market. They control themselves. That is enough. Stage 3. Learning to wait patience sounds simple. In reality, it's one of the hardest skills a trader will ever develop. The market constantly tempts you. Every candle whispers, take the trade. Every breakout looks like opportunity. Every sharp move creates fear of missing out. Most traders cannot resist. They feel uncomfortable doing nothing, so they trade. Again, and again and again. Until commissions grow. Mistakes multiply, and confidence disappears. Patience isn't passive. Patience is active discipline. Imagine a lion hunting. It doesn't chase every animal. It waits, sometimes for hours, sometimes for days. Then, when the moment arrives, it attacks with complete commitment. The lion survives because it knows the difference between movement and opportunity. Profitable traders think the same way. Just because price is moving doesn't mean money is available. The market offers thousands of candles. Only a few deserve your attention. Every unnecessary trade steals energy. Every emotional trade weakens discipline. Every impulsive decision creates another bad habit. This is why experienced traders often appear inactive. People think they're missing opportunities. They're not. They're protecting capital. Capital is ammunition. Without ammunition, you cannot fight tomorrow. Think carefully. Would you rather take 20 random trades or 2 high-quality trades? The answer seems obvious. Yet every day, thousands of traders choose activity over accuracy because activity feels productive. Discipline often feels boring. And that's exactly why so few traders succeed. The market rewards boredom. It punishes excitement. The moment you stop needing action, your decisions become clearer. You stop forcing entries. You stop predicting. You stop gambling. You simply wait. And when your setup finally appears, you act without hesitation. That balance, waiting patiently, then executing confidently, is the beginning of professional thinking. Many people believe successful traders are always trading. The truth is often the opposite. The best traders spend far more time waiting than clicking, because they understand one timeless principle. Money is not made by trading constantly. Money is made by trading correctly. As your patience grows, your confidence changes, not because you're winning every trade, but because you're no longer dependent on constant action. Silence becomes comfortable. Waiting becomes a weapon. And slowly, without realizing it, you're moving closer to the trading zone. Because the trading zone is not built through excitement. It's built through discipline, repeated so many times that it becomes your natural state. Stage 4. Entering the trading zone. There comes a moment in every trader's journey that cannot be measured on a chart. No indicator announces it. No headline reports it. No mentor can hand it to you. It arrives quietly, almost unnoticed. One day, you sit in front of the market, and something feels different. The candles are still moving. The news is still noisy. The experts are still arguing. But inside your mind, there is silence. For the first time, you are no longer trying to force the market to prove you right. You are simply observing, intently objectively, without fear, without excitement. This is what I call the trading zone. Many people misunderstand this state. They believe it means becoming fearless. No, fear never completely disappears. Neither does uncertainty. A professional trader simply learns not to obey those emotions. There is an enormous difference. Courage is not the absence of fear. It is the ability to act correctly despite fear. The market will always remain uncertain. Every single trade carries risk. No amount of experience can remove that truth. But experience changes your relationship with uncertainty. Instead of resisting it, you welcome it. Because uncertainty is the reason opportunity exists. If every trade were guaranteed, there would be no profit. The greatest traders understand this. They don't search for certainty. They search for probability. And probability demands emotional control. Imagine standing beside the ocean. You cannot command the waves. You cannot stop the tide. You cannot argue with the wind. But you can learn when to sail. The market works exactly the same way. You stop demanding perfect conditions. You learn to move with reality instead of fighting it. This is where confidence is born, not from winning, but from acceptance. The amateur trader says, "I hope this trade works." The professional trader says, "If it works, excellent. If it doesn't, I already know what I'll do next." That sentence alone separates emotional trading from professional trading. The trading zone is built on acceptance. Acceptance of losses. Acceptance of uncertainty. Acceptance that perfection does not exist. When you finally understand this, your emotional burden becomes lighter. You no longer celebrate every winning trade like a lottery ticket. You no longer treat every losing trade as a personal attack. Each trade simply becomes information, nothing more, nothing less. And because your emotions remain stable, your decisions improve. Better decisions create better habits. Better habits create consistency. Consistency creates confidence. Confidence creates patience. Patience creates profits. Everything begins with the mind. The habits of a consistent trader. People often ask, what does a profitable trader do every day? They're expecting some secret indicator, some hidden chart pattern, some magical formula. They're disappointed when they discover the truth, because the daily routine of a profitable trader is surprisingly ordinary. He prepares before the market opens. He reviews yesterday's mistakes. He checks the broader trend. He marks important price levels. He decides exactly how much he is willing to risk. Then, he waits. Notice something. The plan exists before the emotion. That order matters. Most losing traders reverse it. They feel emotion first. Then they invent a plan to justify it. They become excited. Then search for reasons to enter. Profitable traders do the opposite. They create rules while calm. Then follow those rules when emotions appear. Discipline is easiest before temptation arrives. Once emotion takes control, logic becomes expensive. That's why routines matter. A routine protects you from yourself. Every successful profession depends on systems. Pilots use checklists. Surgeons follow procedures. Engineers inspect every detail. Why should trading be different? It shouldn't. Professionals trust systems. Amateurs trust feelings. Feelings change every hour. Rules remain steady. When your process becomes stronger than your emotions, your trading changes forever. Ego trap. Perhaps the most dangerous enemy in trading is not fear. It is ego. Ego whispers, "You can't be wrong." It tells you to hold losing positions. It tells you to average down. It tells you to ignore your stop loss. It convinces you that the market will eventually prove you right. But the market has no interest in protecting your pride. Price moves regardless of your opinion. Think about that carefully. The market doesn't reward confidence. It rewards accuracy. And sometimes, accuracy means admitting you're wrong. There is strength in closing a losing trade. There is wisdom in protecting capital. The greatest traders in history accepted losses quickly. Not because they enjoyed them, because they understood something deeper. A small loss is manageable. A large loss destroys opportunity. Capital is your lifeline. Without capital, you cannot participate. Protecting money is more important than making money. That sounds strange at first, but it's true. If you learn to protect your downside, the upside eventually takes care of itself. Why most people never reach this level? The answer is simple. They quit too early. Every trader wants the reward. Very few want the transformation. People expect trading to change their bank account. They never expect it to change their personality. Yet that is exactly what happens. The market demands patience from impatient people, discipline from emotional people, humility from arrogant people, responsibility from people who blame everyone else. The market is constantly shaping you. The question is, are you learning or repeating? Many traders repeat the same mistake for years. Not because they don't know better, because knowledge without action changes nothing. Reading books doesn't create discipline. Watching videos doesn't create patience. Understanding psychology doesn't improve psychology. Practice does. Daily repetition does. Honest self-reflection does. Every trading session gives you another opportunity to become a better decision maker. Take it seriously, because every habit compounds. Good habits compound into consistency. Bad habits compound into destruction. Choose carefully. Final message: if I could leave you with only one lesson, it would not be about charts, not about indicators, not about strategies. It would be this: the market is never conquered, it is respected. The moment you believe you've mastered it, it reminds you how little control you truly possess. Remain humble, remain patient, remain disciplined. Do not measure your success by today's profit. Measure it by today's decisions. Did you follow your plan? Did you respect your risk? Did you remain calm under pressure? If the answer is yes, then you are already becoming the trader you once admired. Profits are simply the byproduct of disciplined thinking. Never chase money, chase mastery, because mastery attracts money. Remember, every legend in the markets began exactly where you are now. Confused, impatient, emotional, uncertain. The difference is that they refused to stop learning. They accepted responsibility. They learned from every mistake. And little by little, trade by trade, decision by decision, they entered the trading zone. One day, you will sit in front of your charts. The market will move exactly as it always has. People will panic. News will spread fear. Social media will explode with opinions. But you will remain still, not because you know what happens next, but because you know how you will respond no matter what happens. That is the mindset of a consistently profitable trader. That is the mindset that survives every market cycle. And that, more than any strategy, is the true edge. So the next time you open your charts, don't ask, how much money can I make today? Ask yourself, can I think clearly today? Can I remain disciplined today? Can I respect my rules today? Because when you master those questions, the profits stop being something you chase. They become something you deserve. The market rewards those who earn its respect. Now the choice is yours. Will you continue chasing every candle, or will you become the calm, disciplined trader who waits patiently, acts decisively, and thinks independently? The charts are waiting. The opportunity will come, and when it does, be ready. Not with hope, but with discipline.